Tom McDonald, Signet Reverse Mortgage. Welcome, Tom.
Good morning, guys.
Hey, Tom.
So, Tom, tell us about reverse mortgage Did You Knows.
Yes, I got a series going, as you know. Did you know? Did you know a reverse mortgage can help hedge against possible home value declines?
I did not. Tell us.
Well, it's kind of a roundabout way, but you have to think about this. So I had done hundreds of reverse mortgages before the drop, 10 years ago or so. And my clients might have been receiving monthly payments. They still continued getting monthly payments, even though the house value might be less than what they already owed.
Mm-hmm. Because they were contracted for...
That's the way it works.
Yeah.
Mm-hmm. Also, most of them had lines of credit. They got to continue using their line of credit if they wished, even though their home value may be less than what they owed, where the bank equity lines, in many cases, they reduced how much a person could use or maybe closed it altogether.
Right.
So the house value had no difference. And if somebody does a reverse mortgage and takes out the line of credit, one thing that happens is the line of credit grows. We haven't spent a lot of time talking about that. I've mentioned it a couple times. But it grows at roughly the same interest rate the borrower is paying. So call that ballpark 5%. So if they have a $100,000 line of credit, a year later that's $105,000. Another year later, $110,000 plus. So it doesn't matter what the home value does. And that kind of accounts for the home value going up over time in general and not having to refinance to get more money out for that purpose.
So does it increase regardless of what the market is doing?
Yes.
That's just part of the terms of the agreement as well?
Right. It's tagged directly to the interest rate that they're paying.
Okay.
So like I say, if they're paying 5%, their line of credit is growing by 5%, even though the market maybe is going up 4% or declining.
Well, that's what I was just going to say. My next question is that, how about if we take a, big hit like we did in the recession? I mean, some of those reverse mortgages, what happened there? I mean, we lost so much equity. You're still...
Absolutely nothing. Like I described.
Wow.
If they were taking monthly payments, they still had access to it. They still came in just like clockwork, first of the month.
So the reverse mortgage company may have been underwater, but the homeowner who took out the reverse mortgage is just unaffected entirely, still has all their money coming, even if it's negative on the reverse mortgage company's side.
Right. And in many cases,
wow, that's powerful.
The home value now has recovered for the most part.
Oh, sure.
Right.
And for the most part, they didn't notice anything. I mean, they might have talked to their neighbors or looked up. Somebody said, hey, the value is now only so-and-so. Oh, okay, that's nice to know. Where other people semi-panicked and is a big deal.
Right.
So
if somebody were to pass away after the meltdown,
right,
which I find interesting. Some people call it a mortgage meltdown. That's like the most horrific description of it. You called it the drop.
Oh, yeah.
Which is about the most benign term you can use for 2008. But
I did have some clients that passed away during that time frame, and their home value was less than what they owed.
Wow.
Well, one of the fees they pay is called MIP, Mortgage Insurance Premium. We haven't gone into that too much. But that's like any other insurance. Everybody pays into it, and then when something happens, the insurance company pays out.
Okay.
So in that case, the borrower's heirs, for the most part, really just had to hand over the keys to the lender. The lender then would sell the house for the best price they could get, and then they would apply to FHA to be reimbursed for their loss. Okay. That would come out of the mortgage fund that's held by FHA.
So
and that way they're willing to do this. Otherwise, if they're going to take possible loss, they might not be willing to do such a system.
Sure. That's
so
or
does every
give much less money.
Does every reverse mortgage have MIP?
Every FHA reverse mortgage does.
Okay.
We have a couple lenders out there
Right.
that have what we call jumbos because they really don't fit into they don't give us much money out. The loan to value is much less. So we don't use them except on very high value homes.
Great. Well, that was a very interesting and informative Did You Know from Tom McDonald, Signet Reverse Mortgage. You can reach Tom and fire away any questions that you have at 265-6385 or reach out to him at tom@reversemortgageconsultant.com.
And it's taking people from where they are to where they want to be. I just like saying that. Thank you.
Yeah.
Thank you, Tom.